What's up, guys? Welcome back to the MoonShot Money channel. If you're new here, welcome, and we're so glad that you clicked on that play button. Hope you enjoy this video. Robinhood's recent IPO, ticker HOOD, sure made a lot of news, and a ton of hate and criticism is out there too. So we're going to try to sort through the fact and fiction and filter all the noise to see if there's anything here to invest some money into, or is Robinhood a complete waste of time and money? Robinhood, whose long-standing mission is to democratize investing, is seen as the main gateway to the markets for young investors. We see that as a really great thing. It's going to be bumpy, so buckle up and let's see what today's investigation reveals. I'm Chase, and this is the MoonShot Money channel. Are you ready? Let's go. We are not certified financial advisors, and this is certainly not financial advice. You always need to do your own due diligence. It's liable to be extremely raucous in the comments, but we'd still love to hear your thoughts on Robinhood, the new investment. Please try to be nice. This is a family-friendly channel. First, let me say, myself, my brother, and my father have all been using the Robinhood app as one of our brokerage accounts for going on 5 years now. We just wanted to disclose that to be transparent. Like many of you, we were very frustrated last year when the app appeared to be broken and we couldn't trade for extended periods of time. During the pandemic, Robinhood users experienced numerous outages. That made the experience a little frightening, to say the least. And of their own admission, the founders wish they had handled things differently with the GameStop fiasco. These bumpy experiences made it feel a little like we were using a less than normal brokerage company. There were, and still may be, some growing pains for Robinhood. What we did like and greatly appreciated about Robinhood was that it eliminated these senseless brokerage fees and brought the world of investing into the hands of retail or smaller investors. That was and still is a great thing. The app is incredibly easy to use and seems to simplify the complexity of the process of investing into something people can understand. Options trading is almost in English now, where a normal person can understand what to do. As many of you know, we like to watch what Cathie Wood is doing and sometimes piggyback off Ark's accumulating purchases. Cathie Wood's Ark Invest purchased shares of Robinhood on its first day of trading last Thursday, July 29th. Cathie purchased nearly 1.3 million shares of Robinhood, worth over $45 million. Ark now holds roughly 4.9 million shares of Robinhood, worth over $172 million. She holds almost 1 million shares in Ark W and over 500,000 shares in Ark F. Robinhood also announced on Monday, August 2nd, in a notice on its app that 301,573 of its users, or 1.3% of the people who have funded accounts, have bought into the IPO. Full disclosure, we were one of those. We're not investing heavily at this point. We just want to be in the game in a wait-and-see posture. For the next few weeks, Robinhood's fate is in the hands of the retail investors. Until the company reports its second quarter earnings, there might not be enough news to bring in the big money. Actually, it may not be clear until the third quarter if Robinhood can build any kind of sustained momentum. If you want to stay connected, follow us over on Twitter at MoonShot Money 1 for retweets and important news and commentary by our team. The first, free trading brokerage has experienced explosive growth in the past few years caused by a boom in retail investing. Robinhood estimates its 18 million retail clients and more than $80 billion in assets in the first quarter, swelled to 22.5 million users and more than $100 billion in assets in the second quarter of 2021. That is some crazy growth. Robinhood is the third largest brokerage based on number of funded accounts, behind only Fidelity and Charles Schwab, which purchased TD Ameritrade last year. Through the years, large retail brokers have basically ignored the approximately 84 million U.S. households who have less than $100,000 in accumulated wealth. We talk to people almost every single week about finances and investing, and they almost exclusively are using Robinhood. That tells us growth is happening, and there is a long runway of growth ahead. Listen to what Kevin O'Leary had to say.
But bottom line is, investing, whether you're in Robinhood or any of the money center banks or any of the online services, is a speculation. I don't care what stock you buy. When you buy something that has volatility to its price, you are speculating. And whether you're 18 or whether you're 80, you're going to play the markets for what they've given you for the last 100 plus years, a 7 to 8% return in aggregate. Now, if Robinhood can democratize investing, I think that's a good thing. I'm a fan, I'm a shareholder, and I'm a big fan of Vlad's. And a lot of people don't understand the platform. You know, one thing you can't do on Robinhood is short stocks. I mean, he is trying to protect investors and learn and teach them how to invest. The bottom line here, I see nothing wrong. And by the way, in terms of fining, you know, FINRA regulations and SEC and regulators, every single money center bank has been fined in past years. Sometimes they break the rules, and that's why we have regulations, and I'm all for it. But at the end of the day, 20 million accounts say it all. Robinhood is here to stay.
Another bumpy aspect, though, is this. There's no doubt that retail traders are much more fickle-minded than seasoned investors. The more Robinhood sells to new investors, the more vulnerable these investors are going to be in some kind of Reddit squeeze play. Amateur investors can be very weak-handed at times. It's just psychology. On the revenue generation side, Robinhood offers equity trading, cryptocurrency trading, and options trading, as well as cash management accounts. Options trading makes up about 38% of their revenue, while crypto is 17% of Robinhood's revenue. In the first quarter of this year, Robinhood found itself in some serious hot water during an epic short squeeze with GameStop. The squeeze was fueled mainly by Reddit-driven retail investors. It was a phenomenon, really. The teamed small investors against the big shorts. At the height of the so-called meme stock surge, Robinhood restricted trading to certain stocks for a period of time, causing an unbelievable uproar. The reason was due to increased capital requirements from the clearinghouses. Robinhood had to raise more than $3.4 billion in just a few days to shore up its balance sheet. That was a hard lesson learned. In June, Robinhood was slapped with FINRA's largest ever penalty, totaling about $70 million. The company has faced numerous lawsuits for those multiple days of outages. As you can see, there are reasons to like Robinhood, and unfortunately, there are many reasons to be leery about them too. So, we want to know, what are you thinking about doing? Sitting on the sidelines or buying up the potential, maybe like Cathie Wood is? Let us know in the comments below. This should be entertaining. Subscribe on your way out and make sure you turn on your notifications too. You can invest in our efforts by simply hitting that like button down below. Earn more, save more, invest more, and give more. And always remember, if you're not interested in your money, someone else is. Have a great day, everyone, and we'll see you on the moon.